Hi friends, I'm back with one more video. So today we will be discussing about the a simulation on debit spread in case if the view goes wrong. Okay, so already I've made couple of videos. So this video has a special content. So I would strictly recommend you to wait until the video completes. Yes, no doubt this is not a new concept wherein I've already discussed a couple of times, right? Whenever the view goes wrong, we will be converting our debit spread to triangle, but this video has a special content. Okay, so stay until the video is completed. So even I've written the same thing, right? Key points for this video is how we will be getting the bigger range triangle. Okay, so right away let me take you to Opstra. So I'm just going to do the demonstration for the 1st September. If you look at my video, right, so already I've made 2 videos on the same expiry. On the 1st September expiry, I've made a iron fly and I've made 2 iron flies. Basically I've shown you how to come with the profit. So now I'll show you if on the same expiry, if we are deploying a debit spread. See, try to understand friends, iron fly is for non-directional and debit spread is for directional. So I've done 2 simulations, one with iron fly with the naked selling by doing the reverse buying and then I've made one more iron fly by deploying a broken wing fly. When the broken wing fly went against our view, how we managed the entire first week's expiry trade. And now I'm just going to tell you the same expiry, but today we are going to discuss about the debit spread, not the non-directional, because debit spread is a directional. So 25th August at 3 p.m. the market stands at 39,000. So we are deploying the trade on same 25th and first is the expiry. So what do we do? So 39,000, right? So what I do is like, this is very important. So basically what I do, I check for 5 strike OTM for me to buy one, right? 1, 2, 3, 4, 5. So now this is meeting my criteria. So anything which is between 210 and 230, I'll go for this thing. So now I'm getting it for 39,500. When the market is standing at 39,000, I'll buy this. Okay, you'll get to know why I'm making this video. And now what I'll do, I'll sell half of the premium. So first I'll check 1, 2, 3, 4, 5. So I'll sell this one 107. Though this is not exactly off, but I'm getting 500 spread difference. So you'll get to know why I'm just selling. Okay, stay with me, right? I will sell this. So this is my typical debit spread. Okay, with 3,000 as profit and 9,000, 3,000 loss and 9,000 profit. This is almost 1:3. So we all know the debit spread. Now you know, right? I will be not doing the adjustment until and unless this 247 becomes how much? 140, for the simple reason being because we have given 240 premium and we have collected 107. So 247 minus 107 is 130. The moment this 240 becomes 130, I will not do any adjustments until then. Okay, I'll take you to the profit and loss. So this 240 should become 130. That's it. Okay, I'll take you to the next day. Okay, 30 on 25th. I'll take you to the next day. Right, 291 criteria is not met until this becomes 130. Okay, 130 or 140 or 120, 130. Okay, now this has not become, right? This is so we are at a loss, but this has not become 130. I'll quickly take you to 130. No, just keep an eye on this until this becomes 130. I'll not do any adjustment. 30 minutes, 30 minutes, 30 minutes. So we are almost, see, this is where, friend. Okay, let me take you to on 29th. So we have deployed on 25th. Okay, so 28th this did not become. So again let me take you to okay, 26th until 3:30 this has not become 130. So this is not fair if I say you to do the adjustments because this has to become 130, right? 247 minus 107, that is 130. This is 199. So we are still under control. But what happened on Monday? We all know because I've done 2 adjustment videos. So all of a sudden we add a gap down the next day. So I'll take it to the 5 minutes. That's it. This has become 32, friends. Forget about 132. This has become 32. See your loss. Your maximum loss is 3,477. You already met your maximum loss. close to maximum loss. Either you can exit your entire trade by accepting this 3000 loss, or if you are a smart trader or a very conservative or a very aggressive trader, I'll show you all the simulations what we can do in terms of mitigating the loss. This video is very special. Stay till the end. This is not a normal video where it will be like I'll be showing you the strangle adjustments. No, but now check. Now this has become 32, so we do not even have control the next day morning, because see, let me show you. 3:30 the market was standing at 39,290. Next day what happened? It had 34,274, friends. So such a big gap down. So that's the reason this has become 32 and your loss is 317. So now what we have to do? We will not do any adjustments at 9:30. At least I'll wait for another like 950. Yeah, even 950. Now this has become. So either you can exit your loss or else you have to do the adjustments. Now the real fun begins. Okay, the basic reason we took 39,500 and 40,000. I'll explain you, friend. This is very important to understand. So where was the market standing when we started? At 39,000. The market was standing at 39,000. You all know, right? This was your CMP, and we bought 39,500. This is very important to understand, friend. 39,500, right? This is your buy. Okay, this is your buy, and we sold 40,000. This is your sold. This is your debit spread, right? 40,000. This was your sold position. This was your current market price. Simple, right? You have 500 spread difference. That's what I told it. Whenever the market stands at 39,000, I look by 39,500. I'll try to look out for 500 spread. You'll get to know why. And then I'll give another 500 spread. I'll sell this thing, because now where is the market standing? This is very important to understand, friend. Market is standing at 38,000. Let's say 450. Let's take an example of 38,500 for the round figure. Now the market is standing at 38,500. Stay with me. This is going to be a very good video, right? So this was your current market price. Okay. So from current market price, from your sold position, what is the spread difference? 39,000 and 40,000. So you add almost 1,000 difference. Okay. 1,000 spread. Now, where is the market standing? From 39,000 it came to 39,500. All right. So now your sold position is almost like 1,500 away, friends. 1,500 away. You'll get to know what I'm trying to stress out. 1,500 away. So now if I want to convert back to strangle, I have to exit this buy position. You all know, right? I have to exit this buy position. Let's say I'm exiting this buy position. So what I meant to say, I'll exit this buy position at 5,000, what? 5,186 loss, and then I will convert this to strangle. So for me to convert this to strangle, let me check this price. Your sold price 40,000, we sold it for 107. Now it is standing at 18 rupees. Stay with me, friend. Try to understand. We are exiting this leg. We bought it for 247. We are exiting at 39,000. We are exiting with a loss of 5,186. That's it. Now, if I want to convert back this to strangle, so we have already a CE position, our CE position at a premium of 18 rupees. So obviously I have to sell a put, right? The moment I've exited this, I have to sell a put close to 18 rupees, right? So let me show you where is that 18 rupees. Okay, I have to sell a put premium close to 18 rupees. Okay, where is that 18 rupees? So maybe I'll sell this one. Where is the price? 36,100. Stay with me. So I'll sell this. Okay, I'll sell this to convert back to what? Strangle. See. Okay, so did I sell? Okay, I have to exit this, right? At the same time, I have to exit this. So I'll exit this buy with a loss of, see, this. That's it. Now, don't you think this has become a strangle now? Okay, so where is your 36,100? So where are we, friend? The market is standing at 38,500, but where is your sold position? 36,100. Okay. So just imagine what range you are getting. So let me delete this. Stay with me, friends. Stay with me, right? Though you're getting bored by when I say stay with me, it has a meaning. Now, Now the calculation comes into picture. Okay, I'll go to this one. Where is your market standing? Your market stands at 38,500 and we have exited this. So now what is the difference between this 40,000 and 36,100? Right, 40,000 minus 36,100, almost 3,900 spread difference. Now where is your market standing? Let's take 38,500. If I take 38,500 minus your lower thing, right, 36,100, you are getting a spread, you are getting a safety of 2,400 on the downside. Let me make a note, 2,400. Now what I'll do, I'll go for 40,000. Now upper range, 40,000 minus market stands at 38,500. So what is your upper limit, upper range you are getting? You are getting 1,500. So friends, try to understand. You are getting a strangle of two. So market is standing here somewhere. You are getting a strangle of, see, let's say I'll draw it here. You are getting a strangle of market is at where? 38,500. Okay, 38,500, and you are getting a safety of 1,500 on the upside and a safety of 2,400 on the downside. So don't you think this is a huge, what do we say, strangle? Okay, let me show you, right? Let me take you to this thing. Okay, then you will understand, friends. So let me take you to Bank Nifty. Right, let me take you to Bank Nifty. I'll go to build a strategy, 8th September. I'll go for this premium. So let me go for 18 rupees premium. Okay, the same thing. Let me sell this. This is 18, that, yeah, 18, and I'll also sell a premium of close to, let's say, 18. That's it. Right, this is the premium. This is the, see, 6.13% on the downside and 4.72% on the upside. So you'll be getting, check the probability, 93%. This is only possible when you select your strikes accordingly. So that's the reason I selected this strike. Okay, so just to show you this difference, you'll get. So do you think for the next 2 days Bank Nifty can break to 6.5% and it will go 5%? If answer is yes, then don't even come into trading. So I'm just showing you the huge range you will be getting the moment you convert your loss making debit spread to strangle. Right. So now what I'll do, see, you will see now already you are at a loss of 2,552, but even the strangle is not giving, the strangle can reduce the loss of only 500. So at max your strangle will give you a loss of 2,000 if you manage it. But if you are a smart trader, what you can do is, if you are a smart trader, because the reason why this is showing loss is, boss, try to understand, market was not even given you a chance, because we were expecting to do the adjustments when the premium was at 130, but market gave that chance. It directly gapped down, and this 130, this 247 has become 39. You're already at the loss. If required, you have to accept this loss, but I'll show you how to mitigate the loss and also come with the profit. My goal is not to come up with the profit. My goal is to mitigate the loss, come with zero loss or minimal loss. Now, if I am matching this, two premiums, right, 18 and 18, right, I'm getting a strangle, but why do I need this much of safety on the call? Look at this line, right? So you have more safety on the put side, but less safety on the call side. What I'll try to do, I'll sell this premium or strike in such a way that the market should come in the between. So I should have equal distance safety on call side, on upside and on downside. Okay, got it? So now what I'll do, I'll delete this thing. So 36,100, right? I'll delete this. Okay, and what I'll try to do, I'll try to get 36,500, because market is standing at 38,500, right? So what I'll do, rather than me getting that 18 rupees premium, I'll make it more aggressive, right? This was the premium we got, strike we got. So I'll go deep inside. I'll go like 1, 2, 3. Maybe what I'll do, I'll try to get this 36,900. Let's see if I sell this 36,900, what will happen now? Right, so now my loss is now 1,330. Initially the loss was 2000, I was able to get my loss to 1330 and check the premium and check the range. Right now I have like equal range on the call side, on the put side, and equal range on the call side. So let me show you by hovering on the mouse. So market stands here, right? I have my break even is like 3.72% on the downside and almost like 4.3% on the upside. Okay, more or less net to net we are balanced. So now what I'll do, right, I'll not do the delta management because I have huge, I have huge what do we say, range. I'll not do the delta management. What I'll do is like I'll just look out for this payoff in such a way that this should not get imbalanced. That's it. If I look at the premium, right, the way we have done last time, right, if see already there is a huge deviation. If I start managing the delta, so then that would not work. So now my only goal is like I have a very good like 4%, like almost like 3.72% on the downside, and I have like almost like 4.34% on the upside. I'll do my best to manage this trade, ensuring that the market stands in the middle. Okay, so now I'll go 30 minutes. I'll not even give any focus on this thing. For me, see, my maximum loss is anyways 1330, lesser than this thing, 1330. So almost you do the this thing, almost 60% loss I've been able to reduce. Okay, so now what I'll do, I'll go 30 minutes. So this vertical line plays a very important role. 30 minutes balanced. This is more or less balanced. So not even give any importance. We are on 29th August and 1st September is the expiry, right? I'll keep a check on this timer. Okay, 30 minutes, right? More or less balanced, right? More or less balanced, right? Balance, see, 320. So I'll not do any adjustment because this is as good as balanced. See, 3.41 and this is 4.7, right? I'll not do any adjustments. I'll go for the next day. For me, I have to just balance this payoff because I have a very good range. Try to understand, friend. Do not buttify the strategy. If I go, okay, let me show you, right? See, this more or less again, these are balanced, right? If I want to do the delta management, then unnecessary we would end up doing the adjustment. See, for me, I have to just reduce this loss. That's it, right? Perfect. This is perfect. So next day, what happened? Say next day morning at 9:20. Oh, the upside doesn't suck. Yeah. Now see, now this is a sort of imbalance. Okay, let me check. Market was standing at 38,471. Next day morning, right, 38,854. We add a gap up, right? Let's wait. We'll not do the adjustments. There is imbalance because now the market stands here, right? The market stands here. We have more safety on the put side, but now less safety on the call side. What is our goal? We have to manage this, okay? But I'll not do at 9:20. I'll wait for another 9:50. Let me see, or else unless this becomes imbalanced, right? I'll go there, more or less balanced, right? Okay, slowly it is coming down, right now. Let me say now, okay, see, now if I want, I can do the adjustment. So now what I'll do, yeah, let me do the adjustment. Simple, friends. What I'll try to do, I'll go to option chain. I'll book this 36,900 with this. Simple, 36,900. I'll book this. Okay, now where is my sold position? 40,000. Where is the market standing? 39,000. So I am almost, my current price, right, my current price is 39,000. My sold, my call is at 40,000. So almost I have like 1,000 spread difference on 30th August, one day before the expiry. Friends, try to understand this video. This video is very important. But still, my current market, the current market price is 1,000 away from my sold position. So now what did I, 36,900 I have exited, right? Now 39,000. So can't I go and sell 38,000 so that I can maintain, right, 1,000 below this thing and 1,000 above is 40,000. Pause the video and try to understand what I'm meaning to say. Now I will sell 38,000. The moment I sell 38,000, so I'll be having a strangle with 1,000 points below and 1,000 points above because already I have 40,000. So now I'll go to option chain. I'll sell 38,000. Now you'll get to know 38,000. I'll sell this. Okay. The moment I sell this, again, see, I am able to convert it back to strangle, but still I do not have the profit. My strangle is not showing me the profit because day 2 we were into almost 3000 loss because market had a gap down. We did not add the chance of doing the adjustment at 130 because this has become 30 rupees. Try to understand, friend. Still we are at a very good position wherein our strangle as a 1000 point. See, that's what, right? See, now see, 38,000 is this one, right? Your 38,000 and 40,000, these are the two open position, right? 40,000 is this one, and then the market is standing where? The market is standing at 39,000. So you have 1000 points safety on the downside and on the upside, and one day before the expiry, because tomorrow is the expiry day, right? I've been like very patient and shouting so that you guys enjoy the video. If the experienced trader, I think they might have got. Okay, now check the loss. The loss is only 651. If you're able to trap the market within this 2000 points range, your loss will be only 651. Got it? Now let me take you to 30 minutes, right? Until and unless this becomes imbalanced, I'll not do any adjustment. Okay, 30 minutes, we are at 12:30. See, slowly market is going up, right? This is becoming slowly imbalanced, but I'm still okay. Though my loss is still 2190, the original loss, friends. The day 2 we were at the same loss, and even day 4 we are at the same loss. We are just reducing the loss. Okay, I'll go for this thing, right? See, now this has become imbalanced, right? Or else I'll go for another 30 minutes, like 220. So what I'll try to do, simple, I'll make it balanced. So now I'll book this. Okay, I'll book this. Now you got it, right? What you have to do, market is standing at 39,500. So we are at 500 point spread and we are almost at the end of the day. So now I'll do what I'll do, I'll try to sell 38,500. Let me see, right? 38,500 to make convert it back to strangle. 38,500, right? Let me see, am I right? 38,500, right? That's it, right? But still I would say, okay, where is your market standing? It's standing at 39,500, right? So what is the difference? 500 is like almost like 1000 points, but here we are at 500. So let me do, rather than 38,500, I'll go for 38,700. Let me see, it's a trial and error, right? 38,700 to balance it. 38,700. I'll sell this. Let's see. Right now you might be wondering, you're able to get your trade balanced, your payoff, and now check the profit. You are at a profit of 671. Forget about profit. Even if you're able to come out with zero loss or very minimal loss, you have achieved. So today, now you have a see, where is your sold position now? See, your sold, see, you have a, see, almost like you have a 1.76% upside and almost like 72% on the downside. If you are an aggressive trader, you can just take this because you have almost like 1.2% upside and 1.76% on the downside. Okay, now what I'll try to do again, until and unless I'll take it to the 30 minutes, right? Now we cannot do any adjustments because we are at the close of the day. Okay, now we are at a loss of 1,441. From 3,000 we were able to reduce the loss to 50%, and see, if you want, you can just do the adjustment, friend, at 3, because this is tough, right, for me to do the adjustment, right? Even if you want, you can do one adjustment here also. So hardly we have done 1, 2, 3 adjustments, right? If you want, you can go another 300 points. Let's do, right? Why to leave? I'll book this. See, anyways you're booking the profit, right? I'll book this. All right, and now I'll go for, let's say, 39,000. Where is the market standing? Right, 39,000. Let's say I'll sell 39,000. We are not in loss, right? 39,000. Where is that? 39,000. So now you will be able to increase your profit because you're adding the extra credit. Now you're again bought back. See, even you can go for another 39,200 also. Let me go to 39,100. Hope Opstra doesn't stuck. Okay, 39,100. Final thing, this I'll just leave it to you, right, based on your trading style. Okay, now your check the profit came from 3000 loss to 1743 if you're able to trap the market within your strangle by doing the proper strangle. Now I would rather say that do the delta management. Okay, now what I'll do, I'll go to this thing, payoff, right? I'll take it to the next day. Right? This is very crucial day, right? 3:30, right, on 30th August. Okay, we are at 3:30. Next day what happens? So we are at a loss of 1218. Next day what happens? Is it right? So your loss is again 2580, but the market is here. So let's see, right, if you're able to trap. See, you have to do the adjustment. If I start showing the adjustment, right, again the video will become lengthy. So 30 minutes, I'll go 30 minutes, 30 minutes. See, market is between your this thing, right? You do your adjustments. Your loss has become into profit. Now if someone says that this is very risky, that and this, that's what I'm telling you, exit your loss a day before. If you are an aggressive trader, I know, I mean, there are like certain, I mean, batch of people like who say this is risky, that risky. See, I'm just giving you an option for each and every one, because you ended up into 3000 loss, and I'm just giving you a different. Hardly we have done 1, 2, 3, 4 adjustments. Okay, if you would have done the delta management, you could have done like 10 to 15 adjustments, and then okay, let's forget about that. So I will exit here. I will exit here the moment the loss. I'll not even stay. This is risky for me. Okay, let me show you, right? I mean, you know, right now you know pretty well know that your profit is like 282. Why am I risking my capital? I could have exited on Wednesday the moment my loss was 600 minus 600 rupees, or the next day morning when my loss becomes zero, I'll exit it. Why should I even play risky trade? Okay, let me show you what happens. Okay, 3 o'clock, 3:20. Okay, let me take you to the end of the day, and you got up with a profit of 1741. I'll not consider this thing because this is a very risky trade. When this was at 0 or plus 42, I would have exited my trade. I saved my 3000 loss with just 1, 2, 3, 4 adjustments. Ideally, I should have done only 1, 2, 3. Yesterday, I've just done one more adjustment just to balance my trade. So now the takeaway from this video is, I'm not trying to showcase, right? I mean, already I've made many videos how to convert the debit spread into strangle and anything. The takeaway from this video is, friends, this one. Okay, let me show you. I'm not sure whether you understood this, because whenever, see, this was your original trade, 39,500 and 40,000. Market was standing at 39,000, right? You and me very well know, when market was standing at 39,000, you bought this and you sold this. So you had a 500 spread and 500 spread, and for this 247 to become 130, this did not even become 130, this directly became 30, and the market was standing somewhere around 36,500. Then this becomes, so now if you exit this leg, and if your this premium was standing at 30 rupees over 18 rupees, right? If you exit this buy leg, if you're planning to convert it to strangle, you were getting a massive strangle with 2600 points on the downside and 1500 on the upside. I've also shown you by taking into sensible, right? By taking into sensible, what is that range? That range is 95% POP, right? That's where we were able to come up with this profit by just doing 1, 2, 3, 4 adjustments. Why? Because you had a massive range on the downside, massive range on the upside, that made you to do less adjustments, and my goal was to make this zero, but in return we got into profit. For the aggressive trader, they can go for profit. Conservative trader like me, I'll go for zero. So my any trade, right, either it has to become zero, or else even a 1 rupee profit is a profit for me. 1 rupee is a profit for me. My capital is very, very valuable for me. Even if I trade 10 weeks, for the 10 weeks, if I'm getting with zero loss, right, I am the one of the successful trader in the trader community. Even for the 10 weeks with zero loss, 11th week if I'm getting like 5%, I'll be like happiest on this universe. Okay, because I am able to save my capital. But why we were able to get this massive strangle because of whenever we are deploying the debit spread, right? When market was standing at 39,000, we went 500 points, we got this, and we went 500 points away, we bought this. So already from the current market price, our sold position is 1,000 away. If the market keeps going down, so on any given day, you'll get a strangle at the moment to convert by having a 1200 points here and 1200 points here. Even 1200 points is a massive range for a strangle conversion. So as and when you balance your strangle, right, slowly you have to keep increasing your profit like this. Slowly decrease the range and start increasing the profit in the middle. Alright, so this is what I wanted to convey. If you did not understand the video, pause the video, go back. This is not the normal video. I've shown you how beautifully the debit spread can be managed in case if your view goes wrong, by converting it to strangle with a bigger range, by not even getting into panic situation, right, by doing very smart adjustments, and end of the day either come out with zero loss or with some profit wherein you can utilize it for your brokerage charges. All right, thank you friends. At least for the view, at least for the effort, give it a thumbs up. And one more thing is, like, please join my I would say join my Telegram channel, friends. Join my Telegram channel, so wherein, see, right, wherein I'll be like discussing about the trades, about the we conduct some quiz. See, this is what I do, right? I show my trade logic, what trades I'm taking. I've taken a 2 Contra trace friends as an experiment basis. I've deployed a twin brother pair trade, so wherein already I made like 1%, right? I'll be discussing about the chart analysis, right? I'll share the adjustments what I'm doing in my current trade, and also you can always join my what is that, my Twitter. Okay, you can go back to my Twitter. Okay, so I've already like 155 followers. I should be like, thanks to all the followers, right? Go to my profile section, right? Go to my tweet section, right? See, this is what I'll be like sharing all the what do we say, the videos, the polls, the quiz, the view, right, the important videos and everything I'll be sharing over here. Okay, so thank you friends, thank you for watching my video.